I want to start with, just a question, open question. How many of you are actively investing these days in the junior resource sector? Just to get an idea. So it's half the room, so it's actually more than I expected it to be, because the venture is down. Obviously, as you know, in the last 4 or 5 months, it's down 20, 30%. And the sentiment is not that great for resource sector. And me being a fundamental analyst, I believe that the fundamentals of the sector are strong, and it's a good time to be selective and seek good ideas out there that you can invest. So I'm glad to see a lot of people actively seeking good ideas. So what I want to do today is to talk about the current market valuations in each sector. So you as investors could use that for internal purpose and kind of make a quick evaluation of the stocks that you're looking at. And then I'm going to talk about some of the ideas in each sector that we like. Here are some disclaimers for the BCSC or any IROC people here, so please take a moment. All right, so fundamental, if you're not familiar with what we do, we've been in business for 16 years. We are the largest issuer-paid independent research shop in North America. We've covered over 450 companies in the last 16 years. More than 200 companies have been in the junior resource space. I myself have been doing this for 13 years and have covered over 200 companies, done numerous site visits, interviewed 500 plus management teams. So been in business for a long time, seen the up and down. Performance-wise, current portfolio, on an average, each company is up 41%. And the top 25 performers, it's up 134% per company, the companies we cover. So let's take a look at how the commodities have performed in the past 24 months. No surprise, cobalt, clear winner, 300%, up from $10 to $40. Then comes lithium. The common theme is obviously electric vehicles and the demand for that. Then comes nickel, 58%. It actually beat zinc and copper. We think nickel is an underexposed / ignored commodity. It's been going up the last 3-4 months, up 25%, and nobody has been really watching nickel. And we think of all these sectors, nickel could be one of the best performers in the next 12 months. Gold and silver, it's been flat past 2 years. With regards to valuation, what we do at Fundamental is we do apply at least 2 or 3 techniques. A discounted cash flow, DCF. We also do a real options valuation model. We also do a comparables valuation model, which is look at similar stage companies operating in similar area, look at their valuation metrics, and see how they fare relative to our company, and see if they're undervalued or not. So what I'm going to talk today is about the comparables valuations. Very easy. Takes 2 minutes for any of you to look at and see if that company is worth continuing due diligence. Easy metric, it's enterprise value to resource. Enterprise value is basically what the market thinks the value of a company is at that point in terms of company's projects, removing any influence from cash or debt. So it's basically defined as market cap plus debt minus cash. That's the numerator. And the denominator we use is the resource, 100% of measured and indicated, and half of inferred. So let's go on, look at each sector. Gold, Eastern Canada, we think the average EV to ounce is around $58 right now, and the range is $20 to $90. A company, if it's trading below 58, it doesn't necessarily mean they're undervalued. It could be undervalued or they have some problem. So as investors then, now we can kind of see if they're really undervalued or not, and then go ahead and look for investing ideas. Going to Nevada, the ratio is lower, $40 an ounce. Why? Because Nevada grades are lower than the average grade in North America. So the grade in Nevada is $40 an ounce. The range is also slightly lower, $10 to $60 an ounce. Africa is even lower, $31 an ounce. And this is a global average in Africa. So it doesn't necessarily mean that some better off companies trade much higher. It doesn't mean they're undervalued or overvalued. It just gives you an idea. Moving on to silver, this metric is for silver producers. At this point, it's $2.3 an ounce. Silver is trading at $17. Market thinks that producing companies should trade at $2.3 an ounce right now. Copper, 3.2 cents per pound. On a good market, we've seen, in the 2007-8 levels, this ratio used to be 6-7 cents a pound. It dropped to 1 cent, 1.5 cents a pound 2 years ago, and now it's up to 3 cents a pound. Zinc is at 2 cents a pound. Cobalt, which everyone loves now, is 1.03 per pound. So what it really means is if you see a company with 10 million pounds of cobalt, just apply that multiple to get an idea what that project should be worth, just to get a rough idea. Lithium, we see a lot of early stage lithium projects out there, most of them focused on brine. So we built a database of 30, 40 brine juniors, looked at the market valuations, looked at the hectare, the land package, and we found that the average valuation today is $3,700 a hectare. So example, if you see a company, 10,000 hectares of brine, apply this multiple and see if that's in the ballpark of where they're trading at now. Very useful metric. The last one is the prospect generators. There are about 25 prospect generators in the country. Prospect generators basically means is they will have multiple projects, 20, 100, 150. They acquire early stage, JV it, and then kind of get royalties or get any minority interest in those projects. They now trade at 3.1 times their book value. So what you want to do is look at the financial statements, balance sheet, look at the book value, apply a 3.1 multiple to see if they are how they are trading. So that's about the multiples and valuation now. What I want to do now in the next half is just to talk about our top ideas in each sector. Number one is cobalt and nickel. I've grouped them into one, obviously because the demand for the commodities are the same, the electric vehicle, which I think this table, I really love this table. I took from a company called Giga Metals. There are 5 types of different batteries out there, and 2 of them, the NCA and the NMC, which accounts for more than 70% of the batteries out there, use both cobalt and nickel. And the table below that, it shows how much of cobalt and nickel is used in a car. For example, cobalt is 10 kilograms a car. Nickel is approximately 30 kilograms a car. Now let's see how we can use that information for our outlook. So cobalt, right now the demand is about 100,000 tons a year. 50% of that comes from batteries, so about 50,000 tons a year. Now, consensus estimate is that there should be approximately 16 million electric vehicle sales in the next 10 years, or by 2025. Apply the 10 kilograms per car I used earlier, 16 million times 10 kilograms. If 70% of the batteries use nickel, we're looking at 112,000 tons just from batteries. That's in addition to the 50,000 tons right now. So where can we get all this additional supply from? As you know, most of it's coming from the DRC, and most of the companies are actually reducing their supply from the DRC. So both driven by demand and supply constraint, we think cobalt has a lot of room to grow, and we see it as a strong market to be investing in. Recently, Elon Musk said he's going to reduce the content of nickel or cobalt in a car from 10 kilograms to maybe 4.5 kilograms, using the same calculation, 16 million times 4.5 kilograms a car times 70%, that's 50,000 tons. That's double the current demand. Even with those numbers, the demand is going to exceed supply, we think. Looking at nickel, I said 30 kilograms per car, apply 16 million times 30 kilograms, 70%, you're looking at 336,000 new demand for nickel. Right now, the demand for nickel in batteries is 3% of the overall market, or 80,000. So you need to see another 250,000 new tons of nickel. And supply right now does not seem to indicate that that's possible. So again, I think that's why nickel has started moving. No one really looked at nickel because of the oversupply in the market. But I think with this new demand kind of dynamics going on, we think nickel could be a good player. So let's, okay, one more chart. Nickel inventories have been dropping in the last few months too, which is another reason why we also be looking at nickel. So in cobalt, I have two top picks. One is an advanced stage company, Fortune Minerals. They have two feasibility studies done. Advanced stage, highly robust economics. They're now looking at financing the capex of the project. In addition to cobalt, they also have over 1 million ounces of gold. Strong management team, and again, if they can get into a financing option arrangement, we think this is a stock that could really take off because the fundamentals are extremely strong. The other pick in the cobalt sector is a small company, $5 million market cap, but they have two projects. One in Ontario, which is a historic producer, and another in Australia, which is an actual 43101 resource, which is aggressively drilling. We like the management team. They have offtake or partnership agreement with a big supplier in China. At $5 million market cap, we think it's severely undervalued. So those for the cobalt. Nickel, I have one pick. We'll be initiating coverage on this company shortly. This is one of the largest nickel, cobalt, sulfide deposits in the world. Advanced stage, huge deposit. 8.8 billion plus of nickel, 530 million pounds of cobalt. Grades are lower. The main benefit of this is this we think is a optionality play, which means if nickel prices really pick up $7, $7.50 plus, this stock really should drive up. The current enterprise value is just $5 million on this project, which has a NPV after tax of 700 plus million. And that's using $8.5 a pound nickel and cobalt of 14, and we know cobalt is at $40 now. Next, moving on to zinc, I have one company for zinc, which is Foran Mining. Again, advanced stage. They're in the Flin Flon area, close to Hudbay. Why we love this project is Hudbay's 2 of 3 operating mines in the area is shutting down, which means they would need ore from somebody there. And in this region, Foran is the most advanced. They have a PEA done. Look at the after-tax NPV, 250 million plus. And the cash cost is negative, 37 cents per zinc. So again, highly robust economics. Management owns 15% of the shares, which means strong skin in the game. The enterprise value currently is only 46 million. So that's zinc. Copper, I have two stories. One is Trilogy Metals, which I think a lot of you may be familiar with. This is a project, advanced stage project in Alaska, one of the highest grade deposits, the size that we have seen in the world. Management top class. CEO is also the founder of Nova Gold. They recently raised $30 million financing. What I wanted to look at is look at the after-tax NPV, $1.4 billion from $3 per pound copper, and the current enterprise value is just $150 million. So clearly, this has a strong backing also from BHP. The only challenge for this company is the Alaskan government is in the process of building a road that can connect the property to a highway, and that's the only challenge that's remaining. But then the road recently got a permit, which or in the process of getting a permit, so that's why the stock is undervalued. So if you want to take a speculative approach, get in earlier, I think this is the story that you should be looking at. The next one is copper. Again, very small. Enterprise value just $13 million, but they have two projects. One in Nevada, which is advanced stage. A PE has been completed. Small capex, 250 million, and they also have exploration projects in Alaska. Now moving on to gold and silver, I have a few stories here. Number one pick is the Dynacor Gold. This is the largest third-party processing company in Peru. They're expecting extremely high growth this year. Last year they produced 80,000 ounces. This year they are expecting 90 to 94,000 ounces. You can see the revenue was increased 10% last year. EBITDA is up 25%. And they have a lot of upcoming catalysts. which we think could be helpful for the stock. One is we expect strong Q1 results. Second is they are drilling on their exploration properties. So any positive results on that could be positive for the company. And again, production growth, news from that. The second one is Thor Exploration, relatively unknown. This is an African story, a Nigerian play, advanced stage. Look at the after-tax NPV, 119 million, and the payback is under 2 years, and the IRR, the internal rate of return, is over 50%. It's very hard to find projects in that kind of robust economics. The market cap is just 60 million right now, $4 million in cash, and they expect to be producing the next 24 months. Oh, sorry, ticker symbol, yeah. Thank you so much, sir. So the ticker symbol there is not DNG, it should be THOR. THOR is the name, so it's on the TSX venture. The third company is Golden Arrow. This is a brand new producer of silver. They actually partnered with SSR Mining, which is over $1 billion market cap company. They had been producing from one of the largest mines in Argentina. They were running out of ore. They saw this advanced stage project developed by Golden Arrow in the last 4 or 5 years, joint venture with them, gave Golden Arrow 25% interest in the project, and now the company is cash flowing. And we expect Golden Arrow's project to be in production in that facility in the next 3 to 6 months, which means that they could be, again, cash flowing. And in addition to this, they also have a huge exploration package in Argentina, over 200,000 hectares, which they're actively exploring. So results from their production project, as well as exploration, could be highly beneficial for the company. Why we like this company very much is look at the enterprise value to revenue. It's 71 cents per ounce. Sorry, enterprise value to resource, 71 cents per ounce versus the average of 2.29 per ounce. And this does not account for any upside from the exploration projects, purely from their producing assets. Fourth one is Bayhorse Silver. Again, another brand new silver producer, very, very small. Market cap is 13 million. Producer in Oregon. We think they could be producing about 700,000 ounces a year, which may result in $14 million in revenue, about $8 million in EBITDA. So it's trading at 1 times revenue, and this could be, operating for another 7-8 years. So again, purely based on numbers, this is a good play that we really like. The last one in the gold sector is exploration play. Mammoth resource, never been drilled in Mexico, focused on the Sierra Madre belt. Based on the results out there, looking at the dimensions, historical results, we think this could be holding over 2 million ounces of gold. Very speculative estimate of ours, but the market cap is under 2 million. They just started drilling. Results are going to come out. So again, people who like explorative or exploratory speculative plays, this is worth watching. Finally is PGM. Under-focused, ignored sector. Palladium, I don't know if you've been following, is up 100% in the last 2-3 years. And this is a palladium-focused company. They're one of the largest undeveloped palladium or PGM, primary PGM deposit in North America. About 4.6 million ounces measured and indicated, 2.7 million ounces inferred. They're trading at $1 an ounce. So purely based on a valuation perspective, it's undervalued. They recently expanded into Alaska, which means they're kind of diversifying, and we may get, see more exploratory results from Alaska. So that's pretty much what I have. We have a booth right across this year. So on the other side, it's 110. So feel free to come by, pick up reports, sample reports. I'll be there. If you have any questions, I'll be happy to take them. Thank you very much.